Hello everyone and welcome to today's More Report with me, Japan Market Analyst at Handset Markets on Thursday the 23rd of February. We've got a fairly sort of neutral open really to the market today. Nothing really doing in terms of direction. You had the Fed meeting minutes out last night and it had a slightly negative impact on the dollar. Dollar had been sort of gaining ground yesterday, just slightly pulled back. You can see that the Treasury yields just dipped away a little bit on the back of the fact that the market was a bit disappointed really. The market had been looking out for slightly hawkish hints pretty much from the Fed, and they came out with comments such as the fact that they would be raising rates fairly soon. Apparently they were debating the administration, i.e. Donald Trump's new government's fiscal plans for a while, and also there was no real sort of suggestion of balance sheet reduction either, so markets took that pretty sort of not negatively, but just slightly sort of less hawkish than they had been hoping. So the dollar's just drifted off a little bit, nothing too significant, and to be honest it's basically flat on the day to day, so nothing major in terms of direction we've got in these markets. Equities are fairly flat, and yeah, nothing really doing at the moment. We've got some interesting moves though on bond yields, certainly in the Eurozone, with the spread between German and French yields. Now that's pulled back quite strongly in the last sort of 12 to 18 hours, as the suggestion is that Emmanuel Macron is going to be sort of joining forces with another centrist, François Bayrou, and that will sort of help him, potentially help him to get through into the sort of second round of the process. So markets took that as a fairly positive move. The euro rallied slightly yesterday, and it sort of impacted on the Treasury, on the French over German spread, pulling that lower. But I think that is going to be a chart that I'm going to be increasingly talking about in the coming weeks in front of the French election, because I think it will be driving the euro. Now, talking about what we've got on the economic agenda today, basically not a great deal really. Weekly jobless claims at 130, 241 up from 239, so nothing really doing there, but still pretty strong numbers there. And then the weekly EIA oil inventories, crude, distillates and gasoline stocks are the drivers of sentiment there. Look at the looking at the distillates here, we see nothing really in terms of direction that you get off that, so mild moves, but the main chart to focus on here is the crude stocks, the weekly crude stocks, which are expected to rise 2.5 here are the crude stocks, 2.5 million barrels again. So that is going to be the 7th consecutive week of gains on the crude stocks. So that would be not great for the oil price. But if the gasoline stocks drop by the expected 1.5 million barrels, then that would be a 7-8 week low on that. So it'll be interesting to see what the outlook will be from that. So oil price volatility is always guaranteed on those EIA inventories. Now, the chart today is euro yen. Now, this is an increasingly interesting chart because it has topped out below 120.50. That completed a sort of a 360 pip top pattern, which actually implies 116.90 on the downside. Now you can see here 118.50 was the low yesterday, and look at this, it's an old pivot. Highs back from July, a low back from December, and again a low yesterday. So holding on to that arguably is a positive, but I think having topped out and now forming lower highs and lower lows, it's not all that great. Looking at the momentum indicators, you'd see the stochastics falling away generally, the MACD lines falling, RSI back below 40. That all tends to suggest selling into strength, and we've seen that again today. We saw that little rebound yesterday on the Macron alliance with Bayrou yesterday, but falling away since then. So it seems to be that rallies are getting sold into. Look at this hourly chart, everything around 60 on the hourly RSI is a chance to sell. Again, that happened yesterday. MACD lines again on the brink of a crossover, similar that we saw a couple of days ago before another sell-off. So I think this is a selling opportunity. I think we're going to retest 118.50 and ultimately put pressure back on that target, and also possibly the next support around 116.30, which at the moment comes in around this old uptrend. So that's interesting. So this uptrend comes in around about the 16.13. Obviously, it seems as though it's all sort of a confluence towards that sort of 116 to 117 area of trading. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.